Good morning, all. CamelbackTrading.org coming to you this Monday morning, August 3rd. First trading day of the month of August, and you're looking at the last bunch of days of the SPY ETF's market profile here on Window Trader. And just like that storm that's barreling up the East Coast, basically heading straight for me here at South Carolina, we have two incredibly powerful forces in the marketplace taking place this morning. First, we went out with a price probe on Friday, right now being firmly accepted. Second, we're gapping higher. It'll be the 79th gap this year. 47th to the upside in SPY. We are looking, both sides have incredible things to lean on. First, in this corner, we have the bulls who are attempting to come with a weekly gap and a monthly gap. Doesn't get more powerful than that. But it does, out of an inside week. So the bulls are looking to gap high above a weekly high and a monthly high out of an inside week. In the other corner, you have the bears who have a 535-point gap prior to the opening that they are trying to defend. Now, inside anything, week, month, day, when you come in, and please listen to this line carefully, when you come out of an inside week, and right now we're coming out of it to the upside, you go with that trade and monitor it for continuation or, just as importantly, lack of. So what does that mean? That means we're coming out of an inside week to the upside. So it means you need to be long. Now, you've heard me say gap rules apply when they're put into context, and that's certainly the case, especially when you're coming into a huge gap. And that last line, or lack of. Well, I'll tell you what, a couple of things to talk about. Number one, this gap will not be filled if we're just going to attempt to grind up, at least not today. I'm not saying it won't be filled, but I think you need either the next time frame in, or it's going to take a little bit more time than today. I don't think we're going to grind up an additional $4. It's very possible, but I don't think it's going to happen. Our pre-market volume right now, 742,000. Average volume down to 68 million. It's just not there. Second, you want to, as a bull, not have this inside week fail. Right now, it's an inside week. It could fail today and you still come out of it. However, that's dangerous once you come out of it on a gap on the weekly and monthly and then to fail it. So huge forces at work this morning. All right, so destinations. Right now, with just over an hour to go, well, right now we're looking to gap almost $2 higher than a weekly high. I'm going to use it on both sides, though. So Friday's high, 326.63 weekly high. Then we have 327.23, which is a monthly high. And it's a poor high in the ES, not in the SPY. And then filling that huge gap at 332.58 from February 24th. If you're able to fill that gap, now, also in there, we have 10 wide at 329.55. So that's going to be a very visual point right now. Our pre-market high right now is 328.61, and then that 10 wide, that's going to be very doable this morning. That's a naked POC that should be hit from February 4th. Then above that, we have 334.82 afternoon rally high from February 21st. For the downside, we're using Friday's high of 326.63. Then we have our price probe, which is A's high from Friday of 326.13. Pre-market low of 325.72. And then Friday's low of 321.33. All right, what is the game plan for this morning? Okay, well, let's get to it. Well, if we do gap above the monthly high, right, you can certainly take a call. Now, again, you know how I feel about getting away too much where we get an inventory adjustment, right? Friday was a perfect example. You know, everybody's screaming gap rules apply. Well, if gap rules apply, that means anybody who bought it here right on the opening got punched in the face because we basically drove pretty straight down. Yes, I took a couple of call plays that made money, but I didn't buy them up here. So very important. So Right now we're looking, and it's still over an hour to go prior to the opening. If we open within around $1 of the monthly high, I will take a call play. And I'd probably play the 327 call that expires today against that high. If that gets filled, then it depends what kind of heat do you want to take, right? It's another 60 cents down to the weekly high. So if you don't want to take that heat, you get out, and then you can get long again, maybe 50 cents. Well, again, as you get closer to M's high. Or you could take some heat and then get out of everything if the gap fills and the price probe is rejected. That is one trade. On the flip side, if we are to open and drive straight up, you should get a speed bump at that 329.55 level, which is 10 wide, and then again at the 330 level, just because it's a psychological level. I don't believe in that, but a lot of traders do, so I wouldn't doubt if sellers try to defend that the first time there. Will I take a short there? Probably not. The only short play I would possibly take is if we start one time framing down in B period, fill the monthly gap, and start heading for the weekly gap. Then I would take a short play. Otherwise, there is not one, and I'll wait for more market-generated information to come to me. Again, if you're in CamelbackTrading.org's voice channel room, you're going to get all these plays as they're happening live. Now, let's go to the charts. So, monthly, one time framing up for 4 months. There is really nothing stopping us from getting to the all-time high except that gap. Once that gap fills, there should be pretty much a steady ascent up to the all-time high. And don't forget, our all-time high occurred in the overnight in both the SPY and ES. That's never held, right? So there's a good chance we are going to get to those levels if the gap fills. Weekly, coming out of an inside week to the upside. There's your gap. Once you fill that, there's not much to the all-time high. Last line of defense for the bears. However, it is not going to be an easy feat for the bulls to fill that gap today, especially if they don't get more acceleration, tempo, and volume. And then on the daily, we're finally breaking out of this huge balance to the upside, again, attempting to fill this gap. Now, real quickly, because the triple Qs are incredibly important, they had an inside week too, right? Right now, pre-market, they're trading at 268.05, which is $2 higher than last week's high. So they're coming out of it to the upside, right? And the previous week above that is 268.41. If they get that, the all-time high is in sight. Remember, markets do not go bull-bear. And since March, the NASDAQ has gone bull, balance, bull, balance, bull, balance, bull, balance, and now they're attempting to come out bull again. Well, if they do, it's a fool's game to short it. I don't care if I miss a $10 move to the downside, but I want confirmation that the bull cycle is over. And for that, that would mean like we're in balance here if we came out to the downside. As of right now, we are not. Good luck trading today. Have a great day, and we'll recap at 4 p.m.